Turning our attention now over to the grain markets. This week we were joined by commodity trader Doug Simon of Tredas. There was a lot of ground to cover with Doug this week, including his take on this week's trade. Today, our market conversation, we're joined by Doug Simon, commodity trader with Tredas. Doug, let's go back to last week. That WASDE report was released on Friday. Bring us up to speed on how the market reacted to that.
You bet. 11 o'clock, the report came out, and the yield had been at 177 on the national corn yield. They brought that down to 175.4. The bean yield climbed up to 51.9. So that bean yield was a little higher. Everybody was kind of thinking that might have dropped down a little bit, but USDA does farmer surveys. They don't actually go out and do ear counts or weights or anything. They do that in September and October, but those numbers were probably a little bit higher than what the trade guest was thinking on, definitely on the soybeans. So the markets opened up weaker, but as the trading day went along and they kind of looked at some of the world numbers, actually the markets kind of rebounded and we finished, positive for a day, and D's corn got back up, towards 640 at one time. So we actually had one of those maybe a little negative reports, but finished with some positivity.
So on the topic of WASDE, we know that weather has been a topic of conversation all year, whether it's right here in the U.S. or across the globe. How is that going to play a role in future WASDE reports?
Well, it's going to be really critical because that yield, even though they've done those surveys right now by phone, there's people out doing commercial evaluations from Pro Farmer and different crop profit, and DTN came out with a yield number last week from Grow Group. I can't remember the final name of it, but they were like 167 and they were using the vegetation indexes. When you looked at those vegetation indexes, there was a lot of variability across the state, and I think if you look at the recent ones from USDA, there's really a dry band across Nebraska into Iowa, into even a small area of Illinois and Indiana. And when we talk, like we're a broker for R.J. O'Brien, the R.J. O'Brien broker network, there's areas in those areas that they say, yeah, the yields are struggling. Minnesota looks pretty good. Illinois probably has, trend or above trend potential, but there's a lot of problems out in Nebraska. But so the big question is going to be, once the USDA gets out there and does those in-field surveys, what it's going to look like.
Let's take a step back and look at, the past couple of weeks. Of course, markets have been trading a little bit weaker as we sit here on Wednesday. What's your take on those recent prices and recent trends?
Well, we had that good finish last Friday, but then we had rains that were kind of projected. So we did get some rain that came into the Corn Belt. Not widespread, but definitely in some areas, but it cooled off. We were running toward 100 degrees, 95, and now we're back in the 80s, and that's the way it looks like going forward. When you still look at the weather maps going forward, we're still below normal on precip. We're not as hot. So again, it's going to be a question of how is this crop going to finish out? And it's an age-old question, what's that final corn yield going to be? So I think everybody's really anticipating that. But now this week, really with Ukraine shipping out more wheat, and then with Russia, they've got a massive wheat crop. So part of the wheat corridor, or that shipments being allowed out of the Ukraine, is partly in the interest of Russia being able to export their crop as well. So I think that kind of goes hand in hand. Still, you got a big problem in the Ukraine with credit being available this next fall for them to plant their crops, because they base that credit on a lot of the contracts that they have. They've got some issues there, so I guess I'm not terribly optimistic about them rebounding their production, but there's also worries about China and the weakness in that economy there too. But I think really it's ultimately going to come down to what's that corn yield going to be and how's it going to turn out.
You had mentioned before we started this program that fund positions are another thing we want to keep our eye on right now. Bring us up to speed on that.
Yeah, we had probably the max fund positions, in corn and beans were both earlier this, back in May timeframe, and they've got about half of that position on. So in some regards, with the market falling off and them getting out of their length, sheds them, at least gives them an opportunity where they at some point could come back in and fill up their plate again. It'd be one thing if they were like chock full of long positions and we're sitting down here, that would be more worrisome, but they've basically got out of that, position. So it also is relating to what's going on in the oil market. Oil's been to 130 bucks this summer. Right now we've fallen back to 87. If you look at the corn and the bean markets, our basis are really tight. The same thing's going on in the oil market. The basis is really firm for what they trade into other countries. So the futures market is weak, but the cash market is on fire. So it tells you something going under, there's good demand longer term. And nat gas, actually, if you look at that, we had highs close to $10 back in June. We fell off pretty hard. nat gas is actually back up at the all-time highs. I mean, we put in a new high today. It didn't finish there. So when you look at those energy markets, they've still had a lot of volatility, and it's going to have a big bearing on what's going on into the future months.
That's on the fun side. You did tease a little bit that basis. We're looking at it, basis levels for old crop and new crop.
Right.
Bring us up to speed on that.
You bet. So we were $1.55, $1.70 over at Columbus, ADM. Blair, is still trading, a positive number up in the 120s, 130s. Columbus is backed off to 90 over, but so old crop is pretty much gone on corn and beans. I mean, the old crop bean basis has firmed up a little bit because their crush values are still good. But for new crop, because of the drought that we've had, we're going to have less corn out in western Nebraska. We're going to have less corn in eastern Nebraska, but we're also going to be Oklahoma, Kansas, Texas. So a lot of that corn is going to be pulled out of Nebraska back to those feedlots. It's also going to want to be pulled overseas into the export markets. We're going to have that tug of war. So when you look at basis levels where we are today versus a year ago, we're about 30 cents better when we're seeing FOB values versus the West. So we had very strong basis levels, all last year. I would expect that our basis levels again for corn should be pretty positive because those carryouts will be tightened down to the 1.2 to 1.3 billion bushel level. Beans are in that 250 million bushel level, and if we have any drop in our yield there, it's going to tighten up that bean balance sheet. So our basis levels will be very firm. So from our perspective as people that like to hedge, we're still open to being on, be able to trade that basis and being able to look where we want to go to what, end user, and being able to take advantage of those basis opportunities. So last year we kept saying basis was hot, hot, hot. It's still hot, and it's going to be hotter for this year for new crop. So there's going to be, I think, tremendous basis trading opportunities going forward.